I want to look ahead to see what investors should look for in 2016. Mark, where should investors place their money next year?
Well, I just read the other day Barron's cover, and not one strategist was negative about the stock market in 2016. I think the US stock market will go down in 2016. I think 10 years US Treasuries are quite attractive because of my outlook for a weakening economy. And actually, I believe that we're already entering a recession in the United States. Then emerging markets, as you know, have underperformed grossly the US since 2011. I think it may still be slightly premature to make a major commitment into emerging markets, but they're moving into a buying range. And then I like real estate in the countryside in Portugal, Spain, Italy, and in Indochina. Indochina being essentially Vietnam, Laos, Cambodia, Myanmar, Thailand. And I think the Vietnamese stock market is very attractive as the economy continues to perform exceedingly well.
Frank, where do you see commodities headed? I mean, that will determine a lot of how emerging markets will perform.
I think commodities are under pressure now because of the debt levels themselves. You have a slowing world economy. There's a lot of questionable statistics that come out of China. But I think you can look at the commodity prices as a pretty good indication of what's going on in China. And I think China is also a function of its customers. You have debt-laden Japan, debt-laden United States, debt-laden Eurozone. And I think all of that debt is putting pressure on commodity prices as production slows down in China. So I think for the initial term, commodities are going to continue to stay weak. I agree with Mark. I think the debt burdens of the world really are going to put us in, if not in a recession, at a very slow growth trajectory. But there is going to come a point, and again, a lot of economics is predicting people, and that's where it becomes so difficult. But I think there will come a point where the slowdown in the economy will force another QE, and maybe this time something of a more direct nature, similar to what Australia did in 2009. They sent a check of $900 for every man, woman, and child below a certain income level, and that bypassed essentially the reserve banking system. And so if things slow down enough and commodity prices get low enough, you'll probably see some more direct monetization.
I just want to go back to Mark real quickly. You called out the persistent optimism of the strategist at the cover of Barron's. But stocks usually do go up every year, or do go up most years throughout history, whereas people who are perpetually negative are usually on the wrong side of things. So even if occasionally stocks do go down, and of course that happens, isn't general optimism the right way to think about things? And we just have a few moments.
I think the right way to think about any investment is to think realistically. And realistically, US equities are expensive. The median PE is high. The market this year hasn't performed well, the typical stock. It's been driven by just a few shares, the FANG stocks, Facebook, Netflix, Amazon, and Google, that were particularly strong, but the median stock didn't perform well.